After yesterday's publication of the FOMC meeting minutes, it became obvious that the regulator will hardly raise the key interest rate in the near future, despite the fact that inflation is approaching its targeted level of 2%. This rhetoric led to the US dollar weakness and encouraged traders of the euro. Although the Eurozone producer prices increased to 1.5% from 0.4%, exceeding the most optimistic predictions, the euro showed almost no dynamic. Just after the release, the currency began falling. However, the drop was so insignificant that we can conclude that the euro ignored the data. Notably, such a jump in producer prices dispels any doubts about a further rise in consumer prices. The Eurozone inflation may go on increasing or even accelerate. Thus, the likelihood that the ECB will have to alter its monetary policy rises every day. However, the European economy is likely to face problems amid changes in the regulator's policy. Despite this, the euro showed almost zero reaction to the report. Since early morning, the pound sterling has been losing in value. This could be explained by the expectations of the US unemployment claims data. The number of the first-time claims may slide below 700,000. Moreover, the number of continuing claims may also drop. Such figures once again prove the confident recovery of the US economy, thus boosting the national currency. It means that the euro may slump, whereas the pound sterling will hardly react to the report. Let us take a look at the trading charts. Yesterday, showing local activity, the euro-dollar pair broke the resistance level of 1.1881 and touched the level of 1.1914. However, later it dropped to the levels locked at the beginning of the day. Analyzing the trading chart, we can see that the accumulation process between the levels of 1.1860 and 1.1885 took place during the Asian session. This led to a local jump at the beginning of the European trade. Judging by the recent price fluctuations, traders should focus on such levels as 1.1860 and 1.1915. A break of either limit will determine the future trading strategy. At the same time, the pound-dollar pair has been dropping for the second day in a row. As a result, the British pound closed 175 pips, returning to 1.3750. On the trading chart, we can see a bounce from the support level of 1.37. Thus, the pair recovered 40 pips during the Asian trade. However, the bearish sentiment still exists in the market. That's why the current jump could be followed by a decline. In the pair, fixes below 1.3700 and breaks the local low of 1.3669 recorded on March 25th. It will have all chances to continue its downward movement. And that's all for now. We keep monitoring the financial and market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.